Hey everyone, I'm Cary Smith and I'm sitting here with Amar Shah. And Amar and I are with Client First Capital. And so, Amar, today we're talking about a topic that is actually on a lot of people's minds, and it's why homeowners insurance costs are rising for real estate investors and what to do about it. Now, a lot of people who are currently real estate investors are feeling the pinch, and others who are considering this are crunching the numbers and just wondering, is this the right move? Right. So let's jump in and dig deep into this topic.
Yeah. I mean, I don't think it's a shock that real estate insurance has gone up. I mean, over the last 5 years, we've seen rates go up in Florida, Texas, and now in California. I think what's happened is that in California, today on February 5th, State Farm has requested for an emergency rate increase on all policies in California. And with that, regular homeowners insurance will go up, but also rental real estate insurance is slated to go up by 40% across the board, right? And we're seeing in California is a lot of cancellation of policies,
Mm-hmm.
a lot of do not renew, like they will not renew, and a lot of people are struggling to figure out what to do. And so this video we thought we'd create really to, with some of our clients, we're noticing the conversations have become around, hey, I got this property, I rented it out for some time. I'm actually tired of being a landlord because of, dealing with tenants, et cetera, et cetera. And now we have this situation where we have this increased cost, right? And
Yeah.
so this is what we're helping people identify and kind of walk through and kind of be a sounding board. Um, First off, insurance has gone up.
Mm-hmm.
We've had increased natural disasters. I would say also inflation and building costs have gone up. We take uh, this interesting statistic. Even if you had 1,000 more plumbers in Los Angeles right now, if we just able to drop 1,000 professional plumbers there, we would not have enough plumbers for the demand that's coming. And so rising construction costs is part of that. There's been a lot more lawsuits, liability claims than we've had in the past. And frankly, insurers are saying like, hey, if I look at my pool of risk, I need to reduce my pool of risk. So I'm going to pull out of high risk markets, right?
That's
And be very specific in what I can insure. So if you have an older, excuse me, older real estate investment or property that's older, they may not reinsure that.
Yeah, and some of these rate increases that we're seeing basically is companies negotiating with the state, saying we don't want to pull out, but we have to pull out. But maybe we can do some emergency rate increases, not just State Farm, but others. But if we implement these rate increases, it allows us to stay in the market. And but there's an assumption there that we're kind of at the apex or the peak, and we may not be there. The situation could still get worse than it is today, and so companies are doing extraordinary measures and emergency rate increases, and and we don't know if we're at the worst case scenario or if there's more to come.
Yeah. As a real estate investor, the purpose is to manage cash flows, right?
Right.
Essentially. And you do that with tenant occupancy, you do it with repairs, and now you're trying to manage the cash flow with higher insurance costs. And this could put somebody in a situation where if they bought a property in the last 5 to 10 years where they have low interest rates, their IRR may be so small that they're waiting for the property to appreciate in order to make money on that investment. If the IRR is so small and the cash flow goes negative because of insurance costs, you could potentially be looking at, what do I do next, right?
Right.
And some of that is, looking at selling the property, right? And I don't think selling the property is as low risk as some people think, because the investor that's buying your property, they're also thinking, how can I secure my investment, right? Like,
That's right.
how will I get insurance? How will I make sure that I'm underwritten correctly?
They're crunching the same numbers you're crunching.
Yeah.
Right. And looking to see, can I make money with this? Right.
Yeah. So, I mean, if you haven't got the rate increase yet, I mean, like, I think there's a couple things that you could potentially do is, improve your property security in terms of fire resistance, flood proofing, just basic risk mitigation so that when these drones or Google images of your roof or whatnot they're taking pictures of, it actually looks like it's, a quality property to insure, right? Another thing we can look at is raising deductibles, right?
That's right.
You know, premiums are going up, but I think most people are comfortable with the same premium, but raising the deductibles if they're maintaining their properties, right? I think most people can wrap their heads around that. You can potentially also bundle policies with other policies so you can like reduce the overall risk by having multiple properties in a portfolio.
That's right.
But all of this is looking at ways that the premiums are going up or they're staying the same, but the risk of not being underwritten is also there, right? And
That's right.
so if that happens, that is a higher risk circumstance, and then that's where you'll have to look at what are your options, and maybe the state-backed insurance could be the best last resort, right?
Yeah.
And Cary, you mentioned something earlier that when we were talking is that this just could be a blip in the market, right?
Could
You know,
be.
like when we think about this conceptually, these houses that are being rebuilt, that those new houses are now a lower risk for the insurance pool, right?
That's
It's
right.
got brand new plumbing, brand new roof. The fire zone has been cleared essentially,
Yes.
right? And so like, the risk to the pool when you look at, all the insurance companies, when those start to come on, it's going to reduce the risk. And
Yeah.
so that could then, reduce premiums as well,
And a
potentially.
lot of these houses are being rebuilt with, new construction technology where the houses don't hold on to those embers and reignite as easily. And so they're a little more resistant to, the burning embers that are blowing through the air from wildfires close by. And so, yeah, so if you're looking at some new properties, you might have some advantages there.
Yeah. So just to recap, when you're looking at real estate, it's a cash flow investment, right? So just making sure that you're balancing out the cash flow. Number two is just looking at, ways that you can proactively make your property insurable by maintenance and upkeep, right? If you do get canceled and you're looking for another policies and you can't find a good policies, even if you get one policy, they may not insure the same amount of stuff that they were insuring before, right?
Right.
And so you got to be very cognizant of that, and maybe look at, policy of last resort being the state-backed insurance policy. And the last thing we talked about here is that this could just be a blip in the market. It could be, you can look at a cash flow pro forma and say, look, all right, let's say if this lasts for 5 to 10 years, does this investment still make sense?
That's right.
Keep in mind that if you do decide to sell, whoever's buying is also doing the same calculations that you are, right? And then, I think that was it.
Yeah, maybe just one more real quick. But if you are still wanting real estate as an investment, you can also just look at lower risk areas, right? And so there might still be some really good opportunities to have some good cash flow. They just might not be in the areas that you were targeting, and you might have to look a little broader.
Yeah. I think this was good, Cary. If you like videos like this, if you like investment topics around investments, retirement planning, estate planning, please subscribe and like our channel. If you would like to be part of our newsletter, we have one newsletter a month. There's no spam or anything else like that. You could head over to our website, which is clientfirstcap.com. And at the bottom, there's a link to subscribe. Thank you for watching. Thank you, Cary.
Hey, thanks, Amar.
All right, bye.